Hello, friends. In this episode, I would like to talk briefly about money and investments. Uh, Especially, I speak from the perspective of mutual funds. There are different ways of investing into mutual funds. Some are small cap, some are mid cap, some are large cap, some are thematic funds, some are sectoral funds. So like that, there are different. Some are flexi cap funds. So like this, people have their own choices based on their risk appetite. So accordingly, you have to invest. You have to invest, and overall, what you have to do is that you have to stay invested. So that you will be on the long game and you will get decent returns in the long run. And currently people are talking much about gold, and again gold also sometimes it is fluctuating. There is a much of a volatility, and commodities are doing good. Then again between silver and gold, silver is more volatile than gold. Gold is the safe bet, so you can invest little bit of money into gold, and don't keep money in one particular aspect. Keep money into mutual funds, then the stock market, then again commodities, then real estate, so that you can average and you can get decent returns. Don't keep all eggs in one basket. So this is the takeaway. Then again, currently we are in 2026. Last year, markets were hovering, and there was a heavy discussion on commodities, and especially this gold and silver. There was too much of hike. So this year we don't know how it happens, but there will be some correction which is expected. Currently markets are overvalued, so we expect some correction. Then again, AI stocks are ruling, and some people say that AI is a hype, but my view is that AI is the reality, and it's not a hype, and it's a hope for the future, and we need to embrace artificial intelligence. What we have to do is that we have to embrace vulnerability, we have to embrace technology, we have to embrace artificial intelligence, and we have to embrace failures. And failure is only a comma, not a full stop, because when we make investments, sometimes not sometimes, most of the times we fail, but again we take feedback, then we have to move to the next levels. So life is all about learning from time to time, from mistakes. Then we have to explore, experiment. Then we have to take feedback. Then again we have to align the strategies in such a way that we can grow as an investor, as an individual. Some people are aggressive, some people are passive. So what you can do is that if you are having a very high risk appetite, be an active investor and be an aggressive investor. Then again, you can also get into stock market if you are expert. If you are not an expert, if you are working from 9 to 5, what you can do is that you can invest into mutual funds, and you can get decent returns, and you can focus on your routine job. So if you don't focus on 9 to 5 job, what you can do, you can become an active investor. If you are having a risk appetite and you are very young, then you can take a risk, and you can stay invested, and you should have a strategy so that you will be able to make money, but at the same time be rational, not emotional, and so that you can make money in the share market. Then there are people, some are investors, some are entrepreneurs. So most of the people are there. Most of the people are entrepreneurs. Very few are investors. If you look at Charlie Munger or Warren Buffett, they are investors. They invest money. They have financial acumen, man, and business acumen, and they invest into stock market, and they have a lot of patience. They have strategy. They have patience, and they have a long view. So they get returns. So this is how the life is. Then again, there is no assurance that we can get the returns. We all make mistakes, but we learn from the mistakes. So it's life, whether it's a life or stock market or whatever it is. So we have to take feedback time to time so that we can make money. We can achieve financial independence. So these are all the things. Then there are people there. There are some people in the stock market. They go for short selling. It's like that. They have their own strategies, but some people they go for futures and options. It's not advisable in my perspective. So best thing is to stay invested in the stock market or SIP, depending upon your risk appetite, so that you can get decent returns. And let me share with you my challenge that I had a brain stroke 5 years ago, and I am gradually recovering. And of course, I have not achieved any financial independence. Why? Because I was more focused about educational learning, and I didn't focus much about financial independence. So now I started uploading videos on financial independence, because I don't stick to one particular genre. In the sense, I publish 55 books in different areas like education, learning, teaching, training. Then I started exploring about money and investments. I am already 62 years. Of course, age is just a number. So you can make money at any time, irrespective of the age. When you look at Colonel Sanders, he was a military leader, and he founded a KFC and became successful. So age is just a number. Only thing is that you should have the fire if you are healthy, and if you want to take a risk, then you can take a risk and you can make money at irrespective of the age. This is my message. The message from this video is that stay invested and diversify your portfolio so that you can get decent returns, and above all, achieve financial independence. Thank you for subscribing to my channel and sharing with your networks. With gratitude.